Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts, and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome everybody guys, let's take a look again on the gold market. So gold, as you can see, still keep trying to stay above the major support area of 1750 and trying to hold the bullish context, short-term bullish context, and ability to move higher. And in general, currently it seems that at least minor upward continuation still should happen. So currently chance on that looks really good. But the problem is that in the current moment it is very difficult to find good entry scenario, because market stands very close to the nearest standing target, and the potential risk-reward ratio, well, it's a bit tricky. Meantime, as we said, once market stands above the 1750, it gives chance to go higher, and it will continue challenging the 18 even resistance as it has happened previously. So consider first challenge, now market is trying to break it again. But this time, this performance is supported by the action on interest rates. So if we'll take a look, for instance, on the 10-year yield, you will see in fall time frame chart that was a really significant collapse here. And here's stands minor retracement in the shape of the flag, kind of tight consolidation, pennant, a flag, or something of that sort. That potentially also bearish. It confirms our view that indeed market should drop more. So whether it will be a really strong action or just minor continuation, we will see. But at least it will be somewhere till the previous lows, around 155 area. At the same time, if you remember our discussion in the weekly report, the further upward action on the gold somewhere to the 1850 might happen only if market breaks the 1.5 support on interest rates. And actually all major analysis on the market, the big investment banks, talk about the same thing. So gold could get the boost if interest rates will turn to the deeper retracement and drop to 1.5. But still, even till the 1.5 area, it's really significant room where the gold also could show the upward action, while interest rates is just trying to return back to the lows which already have been formed. So from that standpoint of view, if you already have taken the position here, you of course could hold it with the stops below the 1750 as usual, or even currently you could move it on the break even. On the fall time frame chart, the wider triangle that we discussed recently has been broken to the upside, and currently overall setups looks relatively simple. So if you still would like to take the position, you need to place a very tight stop, and the only area that might be used for that purpose is below these lows, somewhere around 1780. Why? Because based on the breakout of this consolidation, market, and following the logic of the price action, market has to stay outside of the broken area. If it will turn down again and return back up inside this consolidation, that's what the bearish sign. And that could mean the market could return back at least to 1750 area. That's why if you plan the short-term trade, you do not need to take into consideration possible drop inside of it. That will be sufficient just to focus on the small stress and flows, because that determines the overall behavior in a very short-term perspective. That's of course only for those who trade on the hourly chart. The target will be 1805. So this is the OP target that we have here. It's ABCD pattern that has not been reached yet. And on the daily chart we have the same destination point, but on the different ABCD patterns, XO. So nearest target that might be reached. Approximately, probably it will coincide with that drop to the previous lows on the interest rates. So somewhere around. On the hourly chart you could see that market hopefully hasn't formed any brand bottoms and has shown no drops back to the 1750. The triple to buy pattern that we discussed here, it was enough to trigger the upward reversal. Here's very good rally, upward action, and market take a look right now stands at conference support 1783, 1785, and the broken trend line, as we said. The barrier now to the upside was this widening triangle, right? So market is currently between the two fires. And the first fire is this resistance, and then now it's broken support here. And also this is XOP with this 222 A, B, C pattern. This XOP target has been reached 1794 and even higher, around 1798. So whatever market will trying to do here, probably it might start forming some triangle. I will not exclude this chance. But to keep the bullish context, market has to stay above this area. So if you still would like to take this last effort to the upside, the 1805, the only reasonable place where you could hide your stop would become this confidence area and below this trend line. Because placing the stops even lower, it will be unacceptable risk-reward ratio for this trade. So that's the only suitable level that you could use for trading. Others who trade on the high time frames currently, I think that it's not very logical trying to take the position because market stands at the resistance on the daily and actually almost hits the major target. So in that circumstances, it's not very attractive to take the position. It will be better to wait the reaction on the major target. Once it will happen, market will start bounce. So it'll be much easier to consider taking the long position if it will be actual at this moment. So current situation is mostly only for those who trade on hourly chart on the lower time frames. Very short-term trade, potential target around 1805.